Welcome back to XRP Coin Update, and today we need to talk about something that happened this week that most people are either misreading completely or not reading at all. Because on the surface, the story looks simple. XRP spiked to $1.55 on Thursday, and by Friday morning it was back below $1.45, and today, May 16th, it sits at $1.41. And the reaction across the space has been exactly what it always is after every single XRP move. Frustration, confusion, and the same question that never seems to get a satisfying answer. Why did it pull back? But here's the thing. The pullback is not the story. The pullback is actually the most interesting data point of the entire week. Because when you stop staring at the price and start looking at what was happening underneath it, during the spike and during the pullback, a completely different picture emerges. One that most people are not seeing, and one that this video is going to break down clearly, honestly, and with verified numbers behind every single claim. So let us start with what the price actually did this week and why it did it. XRP has been trapped inside a range between $1.30 and $1.50 for most of 2026. That is not an opinion. That is 5 months of price data every time XRP is pushed toward the upper end of that range. It has run into the same wall and pulled back. This week it briefly broke above that wall, touched $1.55, and then came back down. To understand why, you need to understand what that wall actually is, because it is not random resistance. It is one of the most specific and verifiable supply dynamics in the entire cryptocurrency market right now. According to verified on-chain data, approximately 60% of XRP's entire circulating supply was purchased near the $1.44 level. That means a massive percentage of all XRP holders have a cost basis clustered right around the zone where price has been struggling. These are not sellers who believe XRP is going lower. They are holders who bought at a certain price, watched it go down, and have been waiting for the opportunity to exit at or near their break-even point. Every single time XRP pushes into the $1.44 to $1.46 range, that supply becomes available to sell into the market, and the volume of that supply is enormous. Analysts have estimated the total sell pressure concentrated in that narrow band at approximately $1.16 billion worth of XRP. That is the wall. That is what has been rejecting every rally since February. And that is what XRP briefly pushed through this week, before the selling absorbed the momentum and pulled price back down. This is not a sign that XRP is broken. It is not a sign that the move was fake. It is a sign that clearing a supply wall of that size requires a scale of sustained buying that has not yet fully arrived. The buyers showed up this week. They were not yet large enough to permanently absorb $1.16 billion in sell pressure and hold price above it. That is the honest technical reality of the pullback. And understanding it properly is what separates a led, clear analysis from a panicked reaction. Now here's where it gets genuinely interesting, because while the price was doing what the price was doing, something very different was happening in the data underneath it. Let us start with the whales. This is the number that should be the headline of every XRP conversation this week, and almost nobody is leading with it. According to Sentiment Blockchain Analytics, addresses holding a minimum of 10 million XRP now collectively control 45.83 billion tokens. That represents 68.5% of XRP's entire circulating supply. And that level of concentration among the largest holders is the highest it has been in 8 years. The last time this specific cohort controlled this much of the available supply was May 2018, 8 years ago. That is not a minor data point. That is a structural shift in who holds XRP and how much of it they control. But it gets more specific than that. Wallets holding at least 10,000 XRP reached a record 332,230 as of May 13th. That record was set before this week's price spike. The largest holders were already at their highest accumulation level ever recorded heading into the move. And in the first quarter of 2026 alone, wallets holding 1 million or more XRP accumulated approximately 1.2 billion XRP. That is the highest quarterly accumulation figure from that specific tier of holders since 2023. The XRP network has also added a net 42 millionaire wallets, addresses holding at least 1 million XRP. Since the start of 2026, that is the first steady increase in that specific cohort since September 2025. What this data is describing is not speculation. It is a sustained months-long transfer of XRP from smaller holders and short-term traders into the hands of the largest, most patient holders in the market. And it has been happening consistently, quietly, and largely unreported throughout the entire period that XRP's price has been sitting sideways between $1.30 and $1.50. Now connect that to the exchange data. 7 billion XRP have been removed from centralized exchanges since February 2025. That is a reduction of approximately 16% in the readily available sell supply on the open market. Whale deposits to Binance specifically have dropped 72% since March of this year, hitting levels not seen since November 2021. The XRP whale retail spread, which measures the dominance of large holder activity in exchange outflows relative to retail activity, fell to 88.8%. That is its lowest reading since 2024, and it reflects a market where large holders are overwhelmingly removing XRP from exchanges rather than depositing it for sale. When supply leaves exchanges at this scale and at this pace, it does not come back quickly. It sits in cold storage. It sits in long-term holding wallets. It sits in institutional custody solutions. And every token that leaves an exchange is one fewer token available to satisfy future demand. This is the setup that most people are completely missing when they look at XRP's price sitting at $1.41 and call this week a failure. Now let us look at the ETF data, because this tells an equally important story, and it directly contradicts the narrative that this week's price pullback represents a collapse in institutional interest. The week ending May 15th was the strongest week of 2026 for XRP ETF inflows. Net inflows came in at $60.5 million for the week, compared to $34.21 million the prior week. That is a 77% increase week over week. Daily inflows on May 15th alone, the morning after the price had already pulled back from $1.55, came in at $10.87 million. Bitwise's XRP ETF led daily inflows at $6.9 million on that same day. Cumulative inflows since the November 2025 launch of spot XRP ETFs in the United States now stand at $1.39 billion. And Goldman Sachs has emerged as the single largest disclosed institutional XRP ETF holder, with a $153.8 million position spread across 4 separate XRP ETF products. Read that again carefully. On the same day that XRP's price pulled back from $1.55 toward $1.45, institutional money was flowing into XRP ETFs at the strongest daily rate in months. The price was falling, and the institutions were buying. That divergence is not accidental. It is exactly what informed patient capital does. It does not chase price higher. It accumulates into weakness. It buys the pullback that retail is panicking about. And it has been doing exactly that consistently throughout 2026. In April alone, spot XRP ETFs recorded $81.63 million in net inflows. That was the best inflow month of the entire year, and it fully reversed March's outflows. Bitwise has overtaken Canary Capital as the largest XRP ETF by assets, which analysts describe as a signal that institutional-grade money is now leading flows rather than the retail rush that drove the initial launch volumes. And JP Morgan has projected first-year ETF inflows of $4 to $8.4 billion under favorable market conditions. Standard Chartered's Jeffrey Kendrick maintains a year-end price target of $8 for XRP. These are not retail analysts making social media predictions. These are among the largest and most sophisticated financial institutions in the world, publicly disclosing their XRP positions and projections. Now let us look at the technical picture honestly, because the data is constructive, but the chart right now is not without risk, and this channel does not ignore the downside. XRP is trading at $1.41 today. It is below all 4 key exponential moving averages following the pullback from $1.55. The stop and reverse indicator flipped bearish at $1.55 and currently sits above price, which is a short-term bearish signal. The $1.51 to $1.57 band has now rejected XRP 4 times since February. In mid-February, mid-March, mid-April. And again this week, that zone is serious resistance, and it has proven that. Repeatedly, a daily close below $1.38 on sustained volume would open the path toward $1.30, which is the next significant floor on the weekly chart. Below that, $1.17 has been identified as the deeper Fibonacci support level. None of that is being glossed over here. But here's what sits directly alongside those risks. The descending resistance line that had been pressing XRP's price lower for months broke on the volume that came through this week. The 3-day RSI moved above 67 on May 15th, putting it firmly in positive momentum territory. Multiple analysts have identified a bullish flag formation on today's chart with $1.47 as the level that needs to hold for the pattern to remain constructive. The 20-day EMA and the 200-day moving average are both sitting just below current price, acting as support rather than resistance for the first time since January 2026. The cup and handle pattern that formed between April 17th and this week resolved to the upside on the spike to $1.55. And the $1.40 level that was resistance for most of April has now been described by multiple technical analysts as flipped into support territory following this week's move. The structure underneath this pullback is more constructive than any previous pullback XRP has experienced in 2026. That does not mean the price cannot go lower in the short term. It means the foundation being built underneath the price is stronger than it has been at any point this year. Now let us connect everything together, because individually these data points are interesting. Together they describe something specific. Whales are holding 68.5% of circulating supply at an 8-year high. They have removed 7 billion tokens from exchanges since February 2025. Their deposits to exchanges have dropped 72% since March. Wallets holding 10,000 or more XRP are at a record high of 332,230. The largest tier of holders, the millionaire wallets, added a net 42 addresses in 2026 and accumulated 1.2 billion XRP in the first quarter alone. Institutional ETFs absorbed their strongest weekly inflow of the entire year. During the same week, the price pulled back from $1.55. Goldman Sachs holds $153.8 million in disclosed XRP ETF positions. The descending resistance line that capped price for months broke this week. The technical structure shows bullish flag formation, and 60% of circulating supply sits at a cost basis near $1.44, creating the supply wall that has been absorbing every rally attempt this year. What this describes is a market in a very specific phase. The phase where supply is being quietly and systematically removed from the market by the most patient and best capitalized participants. The phase where institutional money is entering through ETF vehicles while retail participants are reading the sideways price action as stagnation and losing interest. The phase where the surface story, XRP, going nowhere for 5 months, and the underneath story, record whale accumulation and record ETF inflows, are pointing in completely opposite directions. In market history, the specific combination of conditions has a name. It is called distribution in reverse. Not the kind where large holders are selling into retail buyers, the opposite kind, where large holders are buying from retail sellers, where every time a short-term holder gives up and exits near their break-even, a whale wallet or an ETF vault absorbs that supply and removes it from the market permanently. The longer this process continues and the more supply gets absorbed, the less selling pressure remains to resist future demand. And the moment demand arrives at a scale that the remaining sell wall cannot absorb, price does not drift higher. It moves in a way that catches most people off guard. Most people will look at XRP at $1.41 today after a week that included a spike to $1.55 and a pullback, and read it as noise. The data tells a different story. It tells the story of 45.83 billion XRP concentrated in the hands of the most patient holders in 8 years. It tells the story of 7 billion tokens removed from exchanges and locked away from selling pressure. It tells the story of institutional ETFs absorbing their strongest weekly inflow of 2026 on the same day retail was reading a price pullback as failure. And it tells the story of a supply wall that has been absorbing every rally attempt this year, but is slowly, consistently, verifiably getting smaller. As the largest holders keep buying what the short-term sellers keep giving them, that is the move nobody's explaining properly, and now you understand it. This content is for informational and educational purposes only. It does not constitute financial advice of any kind. Every figure cited in this video comes from verified, publicly available, and dated sources. Cryptocurrency markets carry substantial risk and no outcome is guaranteed. Always conduct your own research before making any financial decisions. Until next time, this is XRP Coin Update.